In this video, we are talking about the big Disney Q1 earnings report. Oh my God, there is a ton to talk about. This was an really meaty earnings call. We're going to break it all down, analyze it, talk about it, discuss it. I got Dre Vaskai, Disney Family Man with me up next on OG 55. Welcome aboard to another episode of OG 55. Today we are breaking down that Q1 earnings call with Bob Iger. He is back in the seat doing his thing again. But before we dive into all this good stuff, I want to introduce my fantastic panel. Right over here, we got Dr. Dre, producer Dre Vaskai, host of the Freshly Squeezed show here on the channel. Dre, welcome back, my man.
Hey, happy to be back. This is the one we've all been waiting for here. Bob Iger's illustrious return to the halls of Wall Street, as he was glad-handed by people in the question and answer section. It was hilarious. But to break it all down, I am so glad that you have brought me on, OG. If any of you would like to follow me at home, you can go do so right down there on Twitter. I know it's a little bit rough right now, but I'm sure Elon's working on it as we speak, right? But you can go ahead and do so right there at Vash Sky. And as Christine Waysteins McCarthy would say, and did say, for all the robust discussion right there, you can do that. And if you want to see me, well, it's going to be on the channel you're watching right now, Orange Grove 55, where we have some great shows like the one you're watching right now, Orange Grove 55, the original, the classic, Citrus Corner for all things Walt Disney World. What is it? Story Geeks with Jay, if I'm not mistaken, right? Who covers everything behind the camera. In front of the camera, actually. Orange Nerd, who covers everything behind the camera, and my own, Freshly Squeezed, your source for juicy news and info, squeezed fresh right from the Grove.
And there's the biggest bargain of all.
The biggest bargain of all. That's right. You gotta bring it up there, OG, because it is Christine Waysteins McCarthy.
Yes, and it's the OG 55 bundle, right? You got Story Geeks, Orange Nerd, right? Citrus Corner, Freshly Squeezed. It's the bundle.
It's the whole bundle. Oh, I love it.
Yes. And down below, we got George, the Disney Family Man 23, host of our Walt Disney World show here on the channel, Citrus Corner. George, welcome back, my friend.
Thank you. Glad to be here. Can't wait to get into this nitty gritty detail of because I was at work, but I actually got to hear the whole entire earnings call. So definitely a lot to discuss, but I'm glad to be doing it with you both. And of course, you can find me on my YouTube channel, Disney Family Man 23. You can interact with me on Twitter, not right at this very moment, but you can do so at Disney George. You can find me on the podcast, A Walk with Walt. And of course, you can find me here on my home base with Orange Grove 55, with Citrus Corner, with all that sweet, juicy, but sometimes sticky Disney news and info.
Pay attention, it's showtime.
Yes. All right. Let's dive right in. So we're gonna break this down into like some sections, some segments here, because there's so much to dive into. So to sort of organize it, what we're gonna first dive into is studio and streaming and this reorganization. Dre, do you want to set the table and we'll dive right in here?
Yes. Yeah. So I believe first, we could talk about reorganization first. So, we were all kind of waiting for Bob Iger to actually announce it because, new CEO comes in, he's got to put his stamp on things. There have been some questions about whether or not we were going to, keep Disney Media Entertainment Group, right? And we had that answer basically at the time that Iger walked right into the building, where he gets rid of Kareem Daniels, right? Has him unceremoniously whisked out the door, puts out that memo saying that that there will be a reorganization actually taking place. And, here it is. It stands on basically three pillars. So we'll get the ones we know out of the way first. Disney Parks Experiences and Parks with Josh Giamaro. basically serving the same role. He reports directly to Bob Iger. ESPN with Jimmy Pitaro is another big pillar, and that handles ESPN Networks, ESPN Plus, and all international sports channels under that pillar. And then the final pillar, which is probably the largest, the biggest, and probably the one encompassing most of this time here, Disney Entertainment. And that's led by Alan Bergman and Dana Walden. The company's full portfolio of entertainment, media, and content businesses globally, including Disney Plus and Hulu. So everything that isn't sports or parks falls under Disney Entertainment, just to keep it all easy there for you. Go ahead, OG.
Yeah, no, absolutely. And that's why I think that's why they have two people running that division. And keep an eye on Dana Walden. I'm telling you, I think she's on the short list for Disney CEO to succeed Mr. Iger.
The fact that she was one of the very few mentioned in this whole reorganizational structure and under this Disney Entertainment division, I would think that both Alan Bergman and Dana Walden are being looked at right now. Let's see who actually thrives in their new role right here. But there were some things that were not so great as elaborated by Bob Iger in this, but I'll go ahead and let Bob Iger take it away with this whole thing here. So we've got some excerpts from the call. Here is talking about the strategy for the business going forward under this new reorganizational structure.
Now it's time for another transformation. One that rationalizes our enviable streaming business and puts it on a path to sustained growth and profitability, while also reducing expenses to improve margins and returns, and better positioning us to weather future disruption, increased competition, and global economic challenges. We must also return creativity to the center of the company, increase accountability, improve results, and ensure the quality of our content and experiences. Now the details. Our company is fueled by storytelling and creativity, and virtually every dollar we earn, every transaction, every interaction with our consumers emanates from something creative. I've always believed that the best way to spur great creativity is to make sure the people who are managing the creative processes feel empowered. Therefore, our new structure is aimed at returning greater authority to our creative leaders and making them accountable for how their content performs financially.
Oh, Jerry, pause it real quick. So this is actually very, very important because he's kind of taken like a shot at Bob Chapek because Bob Chapek's media group, was it DMED, I believe it was?
Yes, Disney Media Entertainment Division, I believe.
Yes, run by Kareem Daniel. A lot of Hollywood did not like that restructuring because they felt it took power away from the creatives. Now, Bob Iger is putting it back into the hands of the creative. Now, look, here's the thing. Bob Iger did have a very successful run managing, I think, content for the most part under this sort of philosophy. This is where we got the bulk of the MCU. There was a lot of success with Alan Horn, of course. So honestly, I think kind of going back to his model of like putting it back into the hands of creators, I think is a good move. I understand some of the stuff recently that was definitely residual Bob Iger, like Strange World. A few other things weren't the greatest, but I think the bulk of what we saw under Iger with the content creation was pretty solid. I do trust him more with this than I did Bob Iger. But what do you feel, Dre? What are your thoughts on this? Do you feel like this is the right move? Should we have kept maybe the Kareem Daniel model? Where you kind of stand with this?
Well, I think the Kareem Daniel model had some problems with it. It didn't really stop bad content from getting approved and built, right? It's still permeated, and unfortunately, I mean, I know a lot of those were Bob Iger decisions to put some of those films into production and so forth, and get them released. But it was kind of scattered, it's kind of all over the place. There wasn't really a grand vision where content was going to live, where it was going to go. Chapek wanted a kind of a maximum flexibility structure, and that kind of rubbed Hollywood the wrong way. So it's it's predictable that Iger would want to go back to a structure that was more in line with his philosophy and thinking. Now, it's kind of interesting because he does make a note, and it's a note here on your screen right there, accountability. Over and over and over again. And this is kind of in the same breath that he's talking about cuts and maybe some job, losses and so forth, which we will get into. But it's very interesting how he's talking about accountability. He's like, look, listen, it's about content curation, not content creation, in the fact that we're just going to throw things against the wall and see if it's going to actually stick. No. None of that anymore. We've really got to be pretty picky about what actually gets produced, what we actually put out there, where our money is actually being spent, and where it's actually going. Yep. That's quality, a very interesting thing.
Quality over quantity.
Quantity,
basically.
Yeah.
And the accountability thing, Dre, that's a great catch, because what that says to me is like, hey, you know what? I'm going to give you creatives, the heads of these divisions. I'm going to give you guys freedom.
Yes.
I'm not going to micromanage you.
Sure.
But you don't perform.
I'm going to hold you to it.
Right. I'm going to hold you to it. So, you know what? The free rides are over. Like, if you're not pulling your weight, you get cut from the squad, basically. What do you think, George?
And honestly, I'm all for it. I mean, I think the company, as of right now, needs to have that sort of structure to it, because I think it's been so laxed for a period of time that people just is like, okay, I'm just going to tell this story just because, whether it's good or not, or I'm just going to throw this on there. And it's even with the content with Disney Plus. I mean, there's a lot of programs and product on there that I feel like, and I'm not going to name them, but I think you fellas know what I'm talking about, that just doesn't belong on there. And I'm sorry. And they're just kind of throwing it on there just to fill in space. And, I think this is a great approach to say, you know what, as you had mentioned, OG, you can be as a creative, create immersive storytelling, but at the same time, it better deliver. It better be up to the as we were saying, the quality, not the quantity, to grasp people's attention. And we're also going to get into it a little bit more, but even Iger had made several announcements on already such as films that are already out that they're creating more sequels for, to kind of play that safe notion of, you know what, rather than just throw something kind of original and brand new, not knowing if people to the public is going to accept it. Let's kind of play a little bit of that safe card and take a franchise that is already pre-made that did very well, and let's create more sequels.
Right. 100%. No, whatever. Yeah, they are going a little bit safe with Toy Story 5, Zootopia 2, Frozen 3. These are tried and true, tested franchises that are very, very successful. But you got to deliver. Toy Story 4 with it was kind of rough. You better get like Steven Spielberg to direct the 5th one. I'm telling you right now. You better nail. You better stick the landing. But right here, our friends. First of all, can we give a big shout out to Scott Gustin doing the damn thing every single day? We love Scott, but he says here, Iger announced Disney is working on sequels for Toy Story, Frozen, and Zootopia. Now about those untitled Pixar and untitled Disney movies from a few weeks ago. ..
Yes, yeah, and honestly, I mean, not to belabor the point, but look, listen, Let's be honest here. They've had some misses lately. Especially as it regards to original content, right? Now, Bob Iger talks about how, they're going to cut back on some of the spending, how they have to kind of rein that in, and I'll play some excerpts from that and what he has to say on those subjects. But to me, honestly, and I know people, in our sphere, especially like Alia, for example, right, she was highlighting, hey, they're spending a lot of money on this kind of stuff. They got to pull back a little bit. From my vantage point, it's not just a spending problem. It's a kind of a content creation problem. It's who's creating this content, let's say, right? And, there's really no easy solution to that. So you might as well kind of really invest yourself and the limited capex you have and so forth into the brands that are already established and already have consumer enthusiasm and so forth, right? People want to see more Toy Story. People want to see more Frozen. People want to see more Zootopia. go with that until we can get both our balance sheet back in line and our creative juices flowing once again.
And honestly, I don't mind seeing more sequels of these franchises as long as they're done well, as long as they fit in with the core of what Toy Story is about, what Frozen's all about, what Zootopia is all about. Just make sure you do them well. Don't half-ass it and just throw. And this is what Bob Iger was talking about: accountability.
Right, George.
Yes.
And you hit the nail on the head. And here's the thing too: Bob Iger's legacy is on the line. Make no bones about that. So when he says we're going to focus on quality over quantity, he means it, because he knows if these movies are greenlit on his watch and they turn out not so good, that looks bad on his legacy. Believe me, these movies will end up good because his legacy is really riding on it. It really, really is. So he's going to come hell or high water. He's going to make sure these things are A+.
Especially because in every theater across the nation, if you go in and see Toy Story 5, Tom Hanks will be standing there literally shaking everybody's hand as they walk into the theater.
Right.
We're going to get him. We're going to get him to the back to the theater here. I wanted to go ahead and play this excerpt right here with him talking about better curation of entertainment and brands, reducing costs of everything we make, and so forth. It's around the 45-minute mark. If I'm outside of it a little bit, you'll have to excuse me. But here we go.
Turn this into a growth business without growing subs. So while we're taking off the table sub guidance, we're still going to look to grow subs. We just want to grow quality subs that are loyal and where we actually have an ability to continue to price effectively to those subs. In addition, we're going to
Sure.
This is interesting. Our dear friend Showcase, who we love immensely, a national treasure by any means. He was saying that this whole little spiel about we want quality subs kind of reeks of like we don't want any unfavorables.
Yeah, exactly. Right.
Yeah. A little bit.
It's a little bit. It's a little bit. Right. I mean, they don't want people churning out. That's just the bottom line, right?
It is funny. It is funny, but I get what Iger is saying here. You know, I completely understand what they're saying here. So, but go. I just want to add that in there. A little shout out to our friend.
No problem.
lean more into our franchises, our core franchises, and our brands. I talked about curation and general entertainment. We have to be better at curating the Disney and the Pixar and the Marvel and the Star Wars of it all as well. And, of course, reduce costs on everything that we make, because while we're extremely proud of what's on the screen, it's gotten to a point where it's extraordinarily expensive. And we want all the quality. We want the quality on the screen, but we have to look at what they cost us. So we're going to continue to go after subs, but we're going to be more judicious about how we do that. We're going to look carefully at pricing. We're going to reduce costs, both in content and, of course, infrastructure. There's a lot that we're getting at there. Marketing is another area where we're going to try to rebalance marketing of the platform versus marketing of the programs. You know, Nielsen came out with something a few weeks ago that was stunning to us, and that was that 10 of the top 15 movies streamed in the United States in 2022 were ours. On that list was Moana and Zootopia and Frozen, but also Turning Red and Encanto. You know, that suggests to us that our brands and franchises work extremely well in streaming. I mentioned how Wakanda Forever has done as well. So core brands and franchises, more efficient pricing, getting better at marketing, being a little bit more judicious at promotion, all of those things is how we believe we're going to get to turn the streaming business into a growth business. And one other thing, the streaming business is going to continue to grow, albeit at the expense of linear programming, but consumption of television is not decreasing, it is actually going up.
Okay, and we'll get into that as well.
Yes, real quick. He touched upon, cost, right?
Yes.
One of the big costs with like animation, for example, is when Disney, like let's say Disney Animation Studio, when they do a movie like Moana, right? Sure. They take the artists to Polynesia to like do like these field trips to like, sort of study the culture and what have you, which is fantastic. That's awesome, right? Yeah. But we live in a new world now. It's not 1952 anymore with like Walt and the Nine Old Men, right? We live in the internet age. Like, do you really need to fly your artist out to like Norway to research frozen. Can you get the same effect basically by kind of researching it on the internet? Probably so. I think that's one of the costs. One of those costs where it's like not necessarily needed. I don't know if it necessarily even improves the product. You can research Norway online and basically come out with the same thing. Is it a cool thing? Is it awesome to have these artists kind of immersed in the actual countries and what have you? Absolutely. Is it necessary? I don't think so, but that's kind of where I stand with it.
Well, you bring up a good point because you can defer a lot of those costs if you go through a sequel route, right? You've already been to Norway, you've already know the culture, you already know everything attached to that. You already have the digital sets, the digital infrastructure that you require to actually make those films. If you're going to do something in Arendelle, well, you've done that already, right? And you can just bring those assets out and you can move forward from there. So they're even in terms of content strategy when it comes to these sequels, there is a cost effectiveness to it.
Yeah, no, absolutely. George, any thoughts on that?
Yeah, I mean, I agree with you fellas. I mean, I think it's like one of those things that where, again, throughout the whole earnings call that I was coming to conclusion that they're right now, because Dre and I had this conversation on the phone where they're still in survival mode. Yeah. So this isn't just, okay, let's just, we're back up on our feet, from the pandy, from the shutdown, let's go full-fledged ahead. They still have to fix damages. And I think this is the best route for them to go before making any big sudden decisions moving forward, whether it's with the films, whether it's with the streaming. I think this is the best route that I think we wanted to hear starting out the new fiscal year.
Yeah.
No,
absolutely. Absolutely.
They are in survival mode, and nothing I think bears that out more than some of the things that Iger also announced when it comes to trimming some stuff around the company.
Can I make one point though, real quick before we?
Sure.
And this is actually courtesy of Sean Nyberg. I know a lot of people who aren't as far are going to roll their eyes, but Sean Nyberg, he does make some great points. And when we talk about survival mode, I think it's interesting because there has been a lot of talk about the weekend firing of Bob Chapek, right? How it came like abruptly, and it was like, oh my God, kind of a shock. I mean, we were all shocked at this, right? Yes. I was at a Friendsgiving, and it like blew my mind. I was like, what is going on? I called Dre, like, Dre, what's happening? But it was a real shock that it happened like that and so fast, right?
Yes. So
it kind of like the fandom in general has sort of speculating like, wow, the company must be in like big financial trouble if they kind of fired him in the middle of the night, sort of, right? And they're immediately bringing Iger in. It looks really bad.
Sure.
But Nyberg brought up a great point, which sort of counters it a little bit, where he was saying, yeah, the firing and all that was like a 5-alarm fire. Mm-hmm. But then the reaction to the 5-alarm fire was sort of, I mean, you would think if the company was in this terrible financial position, there would have been more heads that would have rolled than just Chapek and Kareem Daniel. I mean, you would think that there would be a slew of executives being fired because they are on a path of God knows what financial ruin. And just to have Chapek and Kareem Daniel are the only ones that really lost their head or lost their job during that whole thing. It's like it was kind of a weird, really minimal reaction to what seemed like a 5-alarm fire with firing him like over the weekend. And Dre, is it weird? It's kind of a
he's not wrong. He's not wrong. At this scale, though, what looks like a 5 o'clock fire at this scale, very different than at a smaller scale. And the reason I say that is because it when you start to see out there on the horizon, little stormy seas ahead, you got to start preparing now. You got to start battening down the hatches now. You have to start getting everything going. Whereas you're like a little schooner, and you're there, right? You are much more nimble and you can pivot much more aggressively to actually get out of the way of that storm there. There have been, I think, operational challenges and logistical challenges with the Disney operation recently, and when those things kind of really starting to come to light, okay, well, we've lost investor confidence due to, let's say, the losses at the DTC division, and we don't really have a path towards profitability. We're losing consumer interest in key demographics and some of our range of products right here. Our recent releases haven't been doing so well. That's not like horrible, right? That's not insurmountable, but you have to make changes. 100%. And I think they're at that point here. Obviously, too, the economy is, like I said, we're getting down there now. And they talked about how headwinds that they were going to be encountering at the advertising level, right? It's like, this is coming. I think Kristen Winston-McCarthy mentioned headwinds like 20 different times.
Right.
Like it is coming, and in order to face those head on and be strategically sound, you have to start doing those processes now. And so another reason why Chapek is gone, and this is another reason why Bob Iger's making the moves that he announced here. So I'll play this for you. And well, I mean, you tell me whether or not it's heads are rolling, right? Here we go.
We are targeting $5.5 billion of cost savings across the company.
Massive.
First, reductions to our non-content costs will total roughly $2.5 billion, not adjusted for inflation. $1 billion in savings is already underway, and Christine will provide more details. But in general, the savings will come from reductions in SG&A and other operating costs across the company. To help achieve this, we will be reducing our workforce by approximately 7,000 jobs. While this is necessary to address the challenges we're facing today, I do not make this decision lightly. I have enormous respect and appreciation for the talent and dedication of our employees worldwide, and I'm mindful of the personal impact of these changes.
Real quick, Dre, pause it.
Go ahead.
When he says that, a lot of people might be cynical and be like, "Oh yeah, okay, whatever, man." I actually believe him on that. I think Bob Iger is very much a Hollywood guy. I think Bob Iger really does appreciate the creatives in this business, in this field.
And he likes to be well liked as well.
Yeah.
He likes to be well liked, and he's friends with a lot of these people.
Yeah.
And so I do believe him when he says that this is not an easy decision for him. He knows these people, some of them very, very closely. And I think that, I'm sure it was very difficult for him, Absolutely.
Yeah. I believe that represents like 7,000 represents like what, 3% of their workforce or something like that. I think that was one of the statistics that was coming out there.
And most of this is coming from the studio side. The parks are going to be largely, like, I'm not going to say they're going to be completely unscathed, but it's going to be the studio side of things that are going to feel the brunt of these layoffs, unfortunately. But
they are, and that's where a lot of this spending is occurring, right? When you're spending $30 billion towards the studio division, you expect results. And when those results actually, don't come, or there's layoffs to be had, they're going to get down that $30 billion somehow. Right. And unfortunately, that's going to be in the form of layoffs and labor and so forth.
And that's why he kind of mentioned about kind of like nitpicking of like what content is even going to be put on like streaming, for instance, like like it's not just going to be, they want to have the visuals, they want to have the big budget without actually overspending on the big budget, so to speak.
Yeah. I mean, they still want to have the quality, but there's going to be a reduction in content creation, and there's going to be a curation of content, and there's going to be a reduction of head count. I know that they were talking to Goldman Sachs and some other financial institutions about, hey, where can we cut here? Where can we cut there? A lot of it was in promotion, so expect promotion to be, and he even said it on the last clip I played, not this last one, but the last one, where he was talking about how we're going to be marketing the platform, not the programming, right? So why do we have promotions for every single time a Mandalorian season comes out, or an Andor or whatever? Why don't we just take that promotion budget and take it towards the platform, and then we can streamline our operations and so forth, and sell subscriber increase subscribers in a way that makes the most sense. It's a smart thing to do, but expect more of those. And like you said, OG, I wouldn't expect like frontline cast members, let's say, to be let go.
No.
That's
You're safe.
at the parks.
Yeah,
they
just brought back housekeeping, fully at the Walt
Right.
Disney World Resort. So they're not going to bring that back and then cut another.
The hashtag Disney Cast Life, for example, that you've been seeing at some of these openings for Mickey Minnie's Runaway Railway, for Tron, that is all about getting people attracted to Cast Life, to bring people into the fold. Don't expect anything to happen there, but everybody above them, and maybe that includes some parks senior leadership as well, or some specific roles. Expect them to be.
Do you think that could hit WDI?
I don't think so. There's
I think
already been so much attrition at that level. There's no way.
They got nuked with that Lake Nona thing, and I think I really do believe the parks division overall is going to be pretty much largely unscathed. I'm not saying
whether you're like high up, middle, or low, anything in the parks division, you feel that it's pretty much
relatively safe. But that's the thing. Okay, so frontline cast members, safest. Imagineering, you could probably add those guys in, right? Everybody else, though. And even some, maybe some managerial levels of Imagineering. Who knows? You have to include them in this.
But I do think because the park division has been like the belle of the ball, pretty much. Even when these quarters, like the last quarter, was really bad. Not this one, but the one before that, it was really disappointing. The park division is like the one kind of shining star of these earnings reports, right? So I think they're going to target really the problem, which is the studio side. And I'm telling you, the studio side, unfortunately, a lot of people are going to lose their jobs. I mean, this is where they're going to cut like crazy.
And especially since this is the division that started the Walt Disney Company. This is what it's basically known for.
Yes, but here's the thing too, and a lot of people will get on social media and they'll be like, "Oh my God, look at Disney; they're so terrible for layoffs." But look, here's the thing about layoffs: layoffs fucking suck, no matter what it is, right? But you either lay off 7,000 now, or the company ceases to exist and everyone loses their job. You have to sometimes do these cuts in order to keep the whole company afloat and prevent losing even more jobs.
Yeah. And I mean, that's why I feel like cutting right now would be beneficial, because it's the part of the company that should be representing the most, and it's the one doing the least at the moment as far as
if we break down the numbers here, we didn't even go over the raw numbers. But the raw numbers, I mean, you're looking at, sorry, I do apologize. You're looking at a 2.4 million Disney Plus subscriber loss in this first quarter right here. And while Disney Parks Experiences and Products is doing exceptionally well, over and over again, there are other divisions that are kind of stagnant or have just barely surpassed expectations, and it's like, well, where's the bang for the buck coming from? And again, I mean, you're looking at a downturn in the economy, right? Advertising budgets for a lot of these major companies are going away. That's going to obviously hurt Disney, which major companies will look to in order to advertise their products on when it comes to their linear networks, Disney streaming, whatever. And so how are they going to make up that loss? Some of that's going to come in the form of layoffs. And that's, I think, what we're experiencing. Also, too, $5.5 billion in cuts. That's a lot. That's a lot. That's a lot.
And I'm telling you guys right now, and look, I've made predictions. I've been wrong in the past. I've been right in the past. But I am telling you, Puck News, Matt Bellani, who is not just some random Joe on YouTube or Twitter. Matt Bellani's got major connections. And Matt, he's saying at Puck News that Disney has actually talked to Goldman Sachs about what their options are in regards to Hulu.
Yeah.
I would not be shocked at all if Disney offloads Hulu, if they sell it and they license out those titles like the Fox and FX titles, which are very much abundant on Hulu. They sell Hulu to somebody, whether that be maybe Fox to sell back to Fox, or maybe they sell it to Comcast or whoever, and then they license out their library, which would be a huge moneymaker for them. And it wouldn't be a bad idea. And we'll see. Now, Bob Iger didn't say any of that today.
But I think it's on the table. And I agree with you, because on top of that, there could be some willing and dealing with Comcast as well. It's like, we give you this, you give us that.
Oh, yes. I've been talking about this to anybody who will listen, whether it be WW Pro or whether it be OG55. Look, listen, if you're going to sell these Hulu rights off, the place that makes the most sense is with Comcast, right? Because they still own a 33% stake. You sell off your remaining shares, and hey, maybe you don't limit that just to cash. Maybe we exchange something for something we want as well. Well, what does Comcast want that Disney wants? It's those Marvel rights in Florida.
Right.
It's always been a source of contention. It's the one deal that Bob Iger hasn't been able to make. Maybe that's the deal that finally gets that done. It is possible. However, 39:37 on the recording, Bob Iger reiterates streaming is the number one priority. He says that over and over and over again, but with some qualifiers. And I want to go ahead and play this right now. And this really kind of emphasizes, because he kind of details it and goes throughout. It details their previous strategy and what their strategy is now and how this is different. So I want to go ahead and play this, and this does deal with the Hulu thing as well, which we'll get into. So here we go.
Not on anything particularly large, but on a few things, and we're simply going to have to get more selective. ESPN Plus actually has grown nicely for us, and it's shown us that the ESPN brand can be enjoyed and can be expressed well as a streaming brand, and I think that we are going to continue to look at that as a potential pivot for ESPN away from the linear business. But we're not going to do that precipitously. We're not going to do that until it really makes sense from an economic perspective.
Pause it real quick, Dre.
Go ahead.
This was kind of, if I'm not mistaken, I think Peltz is kind of for spinning off or selling off ESPN. This was kind of like a little bit, isn't he? From what I understand.
I thought Dana Loeb was for it.
Oh, I'm mistaken. Okay. No worries. I thought maybe that was a little bit of a like, hey, we're keeping ESPN, Peltz. Don't even think about it. But
this is why I put up the graphic of the pillars and the reorganizational structure. The fact that ESPN is one of those foundational pillars for the entire company, that tells you right off the bat they're not doing anything with ESPN.
Yeah.
At 47.15, Iger even says ESPN is staying. He reiterates that over and over and over again. He finds value in that brand. However, the one thing you didn't hear about when it came to ESPN, no mention of gambling whatsoever. So
Iger's not on board with that stuff. I think he was critical of that. I don't think we're going to see the gambling. I really don't.
Nope. I don't think so. I mean, apparently he's got some stuff to work out with Pitaro, but the fact that it didn't even exit his mouth at all, nor Christian Way-Sons McCarthy's mouth, that tells you everything you need to know on that story. It's going to be interesting to see how he kind of, rights that ship. But again, this is the big quote here.
The first part of your question, what either what's changed or where are we headed from what was the second investor day, I think a few things. First of all, we were, as a company, in a global arms race for subscribers.
Right.
And it was the number of subscribers that had become kind of the primary measurement of success, not only here in the company, but in the investment community.
Right.
And in our zeal to go after subscribers, I think we might have gotten a bit too aggressive in terms of our promotion, and we're going to take a look at that. I listed a number of things on the call. That's one of them. I talked about pricing as well. That's another, where we really have to look at, are we pricing correctly? It's interesting, as Christine noted, we took our pricing up substantially on Disney Plus, and we didn't suffer any we only suffered a de minimis loss of subs. That tells us something. It may also tell us that the promotion to chase subs that we've been fairly aggressive at globally wasn't absolutely necessary. So,
yeah. Well, and here's the thing too that I think is of note is that he mentions the arms race for subscribers, and that arms race now is really it's really not important, especially amongst the investment community in Wall Street. They really don't care about how many subs you have.
Correct.
Are you making money? And that's why I felt like this quarter in particular was actually a pretty solid quarter, because one of the biggest black eyes of the whole report was the loss of 2.4 million subs of D+. But when you put it in the context of where Wall Street's at right now, yes, of course, you don't want to lose any subs. But the losing 2.4 million in a world where the arms race is sort of waning, isn't the worst thing ever, in my opinion. I think
that's what he's talking about.
Yeah.
That's what he's talking about. I mean, the peak losses were experienced in Q4 2022, right? With that 1.5-ish billion dollar loss in the DTC division. Obviously, that was a lot of Wall Street analysis were suggesting that was one of the big reasons why Chapek was let go. This quarter, they only experienced a $1 billion loss in the DTC division. And what Iger's kind of emphasizing is like, look, listen, we reduced our losses in this field. We cut promotion. We cut a lot of stuff. But yet we only experienced a 2.4 million subscriber loss, right, in our Disney Plus division. Also, too, that's when they brought out price increase for Disney Plus itself. That's what they brought the ad to it, and we only lost this much. And that's kind of what he's saying here. It's like, look, listen, it's not really about subs, and he's exactly correct. It's about profitability. This is why, for one, they're not going to be talking about sub targets anymore. Remember, that was a big deal during the Chapek era. They said they weren't going to go forward with that anymore. And two, they emphasized profitability by the end of 2024, fiscal year 2024.
And they reiterated that over and
yes.
over again. And even Christine Wayslice McCarthy even said, I'm going to repeat it from Iger.
Right. Well, and that's because they're, all in right now, I think they're $12 billion in the hole for the DTC division. Yeah. People want to be starting to look at profitability. Because, think about $1 billion here. That's a cruise ship. That's the Star Wars Galaxy's Edge. We got to start making some money back on this thing.
Right.
That's why they kept reiterating it over and over and over.
Well, and the reiteration also sort of points to like confidence in a way, because not only are you saying you're going to do this, but you're doubling, tripling, and quadrupling down on it. There's no going back now. They better be profitable by the end of that. So, we'll see. But I mean, they are really, really leaning into that, and they seem pretty confident in the fact that she kept saying it like over and over and over again.
Right. And I want to go ahead and play this last part
sure.
to end this segment right here. This is going to be something that a lot of investors have been looking for when it comes to Disney. And it was a stick in Chapek's craw for a long time. Obviously, Peltz, this was a big deal for him as part of his, Restore the Magic campaign, I think is what it's called, right? Yep. It's the Dividend. And what's going to happen here?
For spectacular coverage and entertainment to audiences who have a deep connection to the brand and content. Now, when it comes to investing in growth and returning capital to shareholders, we will take a balanced and disciplined approach, as we did throughout my previous tenure as CEO, when we invested in our core businesses and acquired new ones, bought back stock, and paid a dividend to our shareholders. As a result of the impact of the COVID pandemic, we made the decision to suspend the dividend in the spring of 2020. Now that the pandemic's impacts to our business are largely behind us, we intend to ask the board to approve the reinstatement of a dividend by the end of the calendar year. Our cost-cutting initiatives will make this possible, and while initially it will be a modest dividend, we hope to build upon it over time.
There you go. So
yeah,
and that's a big deal.
That's a big deal. And I told you, Dre, over the phone today, like this takes a lot of wind out of Nelson Peltz's sails, in my opinion. One of the big arguments that Peltz was making all this time with the dividend. Now that Disney's saying, hey, look, you're getting your dividend back. Okay. There's not a whole lot left for Peltz to stand on now. Like,
and they're appeasing to the people that is standing in the way between whether Peltz or not gets that seat on the board.
Oh, sure, yeah.
So for Disney to then say, you know what, we got to kind of get our shareholders back into our good graces. Let's give them what they want.
Right. And our friends over at Valiant Renegade, which, by the way, you were on WDW Pro's channel the other day on YouTube, talking all about Universal coming to Europe, maybe.
Oh, yes.
I'm gonna link that because that was a fantastic conversation, Dre. I'm gonna link that at the end of this video. I want everybody to check that out. That was phenomenal.
Good stuff.
But It was great stuff. But VR and Pro today, we're talking about this dividend, and I got into a great detail about it and how the dividend that we're probably going to get right now is not going to be the dividend you saw maybe pre-Pandy, right? It's going to be less, and that's I think they're right on that. But here's the thing: I think as a strategic move, this was the kill shot for Bob Iger, because it's like, what's Peltz's argument now? It's getting harder for Peltz to kind of navigate this. Now, look, there could be a lot of things that could happen between now and that annual shareholders meeting in a couple of months. I get that. But as of right now, I think that the road to the board seat has gotten a little rougher, in my opinion. Now, I know he's bought more stock. I think, Ray, you said $1 billion worth now?
Yes, through Trion Group, he has upped his stake from $900 million, as it was reported before, to, I believe, a most recent SEC filing has him over $1 billion at this point.
No, that works for towards his benefit, but I just think that, like, I don't know, he's really short on solutions, and now the dividend's back. It's not looking great, but anything can happen. So I'm not writing him off yet, but I do think that Iger really did kind of kneecapped him a little bit today, in my opinion.
Well, if I'm Peltz, I'm going, hey, look at how much change has resulted just from me coming forward with my what is it, restore the magic campaign, right? Imagine what I could do if I did have a seat. Look at what I'm doing externally. Yeah. What if I was internally? And look, I'm not looking to be CEO. I just want a board seat.
And honestly, and if he doesn't get that seat, then hey, he gets one hell of a dividend.
Yeah, right. That's true. But also, well, that's actually very true. But look, listen. I mean, this is why I was kind of excited about Peltz actually staging this whole proxy war, because I knew, if nothing else, if Peltz doesn't get on, and we don't see substantial change from that end, right? They at least have to address his concerns, right? They at least have to head him off at the pass, and they're doing it, and so mission accomplished.
Yeah.
I think it's good, and the dividend had, like I said, it has been, man. I mean, I remember every other earnings call, especially when when Chapek would go in front of financial institutions and for interviews and so forth. That was like the question that was asked every single time. When is the reinstatement of the dividend actually going to take place? And finally, now we actually have that answer, and I think it's very, very good. Yeah. Okay, so I think,
is that the end of it?
That about rounds out that whole thing. But what is it? Bob Iger was stated that they're going to be reevaluating pricing strategy across all sectors. Well, and that includes the parks division as well. Now, before we get into the really juicy stuff when it comes to the park division, right? It's the thing that everybody wants us to talk about, and we will get there, I promise. I want to go ahead and put these things back into perspective a little bit. So Christine Waysons McCarthy did make some comments. I don't know if you heard, but she was in there too. And she had this to say in terms of capex. Now, we were hoping for, and what I was hearing was that the Parks Experiences and Parks Division was going to get an additional $1 billion up from the normal $6 billion that they've been allocated every single, I believe, on a quarterly basis. They've been given. Maybe it was an annual basis. And I was hopeful that they were going to get that additional money. Well,
I was disappointed.
Christine,
I was disappointed with this one.
Christine kind of rained on that parade a little bit there, so I'll go ahead and play her comments really, really fast here. Here we go.
Guidance range. We also continue to invest in our parks and experiences globally and in other capital projects across the enterprise, and expect that fiscal 2023 capital expenditures will total approximately $6 billion. This is lower than our prior guide of $6.7 billion, primarily due to decreases in capex at our domestic parks, reflecting in part some timing shifts.
Yeah, so
it's bad enough she had to cut down the portions of the food. Did she have to cut down?
Yeah.
So the annual expenditures just got cut a little bit, which was really unfortunate.
And it is a little bit. I mean, look, I don't like it. I wish it was 8 billion, 9 billion, 10 billion, whatever. A park fan, I want it all. But like, yeah, this isn't a huge drop, but it's disappointing. It really is, At least I would have liked to see at least the same amount,
It stings a little bit, and I'll say this.
Gives me hives.
You got stuff opening, right? So Tron is opening. Well, you don't need to necessarily, invest a lot of capex into that anymore. It's open. Mickey Minnie's Runaway Railway is opening. Toontown is going to be open next month, if I'm not mistaken, right? Somewhere around that time. These things are opening again. Doesn't make sense to keep capex spending at an increased level, let's say, if you don't necessarily need that much capex to get those things operating and running and so forth, right? So, does that remaining amount that would necessarily be pushed towards getting those big investments online? Could those be pushed out to refurbishments or maybe some other capex spending in some other areas? We will see. I think we have an answer to that coming pretty quickly here. Bob Iger meets with Judge Demar. Okay, yeah. Go ahead.
Yeah. Well, and this might be an answer maybe to that. I mean, Bob Iger meets with Josh D'Amaro about expansions at Disney parks, plans to add capacity via new lands and rides based on most popular franchises. So while the capex has come down, it seems like there is a commitment to add capacity through building new lands, attractions, and what have you. That's encouraging to me.
Hopefully. Iger did reiterate again, we're going to be managing capacity at our parks, and a deep emphasis on managing demand and all of that. And yes, there were talks of growth, and I will go ahead and play those comments in a moment, but it was a little bit discouraging that there was an enhanced emphasis placed on managing capacity, not improving it. The news today does give me hope for sure, but then you add in the capex, reduction there. I
have that hope there
hesitant.
too, because basically what Iger was saying that the reservation system's pretty much so far here to stay.
Staying, yeah.
It is what it is, but the one point that he mentioned about to be able to expand the parks, to add capacity, which would bring in a new total of where they would say, okay, at this number, this is where we're going to cap it off. That's where it kind of gives me the hope of how long that would take. That's where it's unknown. But I mentioned to Dre on the phone earlier after the earnings call had ended that me personally, I feel like that they are still going to invest in the parks for expansion. I just think it's not going to be to the same level as we're used to seeing it, where we're seeing 5 or 6, 7 projects stacked up one after the other. I think they're just going to take...
haven't seen that for a while.
Yeah. They're going to take like one big project in one specific area, focus on that, and then move on and so forth.
Yeah. And this is kind of like, I'm going to read real quick, like what he said here, which it kind of pertains to this whole situation. It says, this is from Bob Iger. He said, lastly, we have learned that when we invest in increasing capacity, the Star Wars lands were a great example of that. Pandora was a great example of that. We can grow our business. In fact, if you look at the results, when we put Pandora at Animal Kingdom from year to year, they were stunning at how many more people were visiting Animal Kingdom. I mentioned earlier in the call how we're going to bring a version of Avatar to Disneyland, which we will bring up.
We will get it
in a little bit.
We're going.
Yes. We have other opportunities as well. I've talked to Josh D'Amaro about this very recently, like this morning, to really look at all the great franchises in the company and see where we can invest in them in the parks to increase capacity while preserving guest experience. This is a very encouraging thing. It seems like they are actively looking at, okay, now look, the days of non-IP attractions are dead and buried. Okay,
oh, yes.
It is not happening. Okay, that's dead and buried. But it looks like they really are serious to some degree about expanding these parks to increase its capacity. We'll see what happens, but it was good to hear.
Yeah, and then oh, your capex, yeah, we're just gonna reduce that. That's the kind of like the mixed messaging that's coming out of here. I'm not saying it's not gonna happen. I'm not saying that there aren't gonna be expansions. And I had that quote lined up through his words, but I'm glad you read it because we could pick it apart. I think a little bit more with a little bit more nuance, right?
Well,
exactly,
and we'll also,
100% correct. Oh, go ahead.
Yeah, well, also from what I understand, the capex is for this year, right?
Yes, it's a rolling annual basis. Yeah.
So these lands, I mean, he might be referring to stuff that's 2 and 3 and 4 years out.
That's the point I made to George earlier about like peak investment, right? Peak investment is probably maybe. I mean, let's take the Avatar thing for instance, right? We're gonna hold off on it a little bit. Let's say you build a Pandora somewhere, right? Could be a little park at Disneyland. I don't know. We'll see. So let's say you build it, right? Well, your peak investment's probably going to be a couple years in. And that's right around the time that in 2024, right? That maybe we can be getting some profits from the DTC division, right? And we have a little bit more revenue coming in. Maybe international visitation is starting to go upward. Again, there's going to be a lull in 2023, but maybe that doesn't exist in 2024, 2025, right? And so, maybe you can incur those. You can incur those additional costs. Offset them by that revenue increase at some of your other divisions or intra division. So,
or you could even do, just as they were mentioning about the Beyond the Big Thunder with Coco and Kanto and the villains, where it can be cut off into phases, sort of like how they did with New Fantasyland, where you could do 1 year's budget just focused on Coco, and then the next 1 or 2 years focus on Encanto, and then do the villains at the very end. So if they wanted to do it that way,
you could do that. And OG, you make a great point here. Of the original attractions, they're gone. Look at what they're doing in the studio side, right? Studio side, they're putting all their eggs in the brands and franchise basket, right? And he's talking about curation, quality over quantity, all that. Apply that same thinking to the theme park division, and that gives you an with a sequel for Zootopia, it's pretty much already said and done. Zootopia is pretty much going to go in Animal Kingdom at some point or another.
Probably. Our source, who we call Dude Trust Me Bro, he or she even said that everything that was like on the books under Bob Chapek has been reset. Iger came in and was like, we're going to relook at everything. So everything that we saw at D23 is up in the air.
Dusty Sage even said something to the effect of, hey, if you have any projects that you're looking to maybe get approval, or maybe we're looking operationally how we can improve some things, pitch them, right? And coming sometime soon, maybe there's an evaluation process. And actually, well, I mean, you heard it from Bob Iger's own words. There was a meeting this morning about that kind of stuff. That's interesting.
This morning,
because there were literally zero rumors about Avatar coming to Disneyland. Zero. This was a new thing for sure. This was something that probably came about around the time Avatar was like kicking major ass in theaters, and it was on track to do over $2 billion. I'm sure it was around that time when Iger and DeMar was like, "Okay, we got to bring this to the parks. Where can we do it?"
And James Cameron emailing Iger himself saying, it's we're waiting.
There
here.
Are possibilities here.
Get it in there.
I'll play when his recorded thoughts on this and why Avatar is now in contention here. So let's get into it, but we got to start it off slow.
Before I turn this over to Christine, a few comments about the quarter. James Cameron's Avatar: The Way of Water, which was easily the most successful film of the quarter, has become the fourth biggest film of all time globally, with close to $2.2 billion earned at the box office to date. The global popularity of this film will result in the creation of more opportunities for fans to engage with the franchise, which they've been doing at Walt Disney World's Pandora, the World of Avatar, as well as in theaters globally and on Disney+, where the first film has delivered very strong numbers. And today, I'm thrilled to announce that we will be bringing an exciting Avatar experience to Disneyland. We'll be sharing more details on that very soon.
See,
Avatar. There you go.
Now, this guy up here, folks, has been adamant that you can put Avatar in Disneyland.
Yeah.
Yep.
And a lot of people giving him shit over it, but I tell you what, it's coming whether you like it or not.
I'm telling you, and it's that motorboat Autopia sub area. It straddles Fantasyland and Tomorrowland, which is perfect for a franchise like Avatar, which straddles the future and fantasy beautifully. And it also, one of the big concerns with fans is if we get rid of the sub lagoon, we're going to lose the aesthetics of the lagoon. I think people are more concerned about the aesthetics and the actual attraction going away. You put anything Pandora or Avatar in that spot, you're not losing aesthetics, you're gaining aesthetics. Well, that's going to be definitely a plussing for that whole area. I think that's the spot they're looking at. Now, a lot of fans are worried because, Iger said Avatar experience. They're kind of like their brains kind of going to like, oh, it's going to be something kind of shoehorned into like
it's going to be a photo op.
Yeah, or ESPN or like ESPN's or something. Like I'm going to tell you right now, meet and greets and little things like that do not get announced at quarterly earnings calls.
Correct.
Okay. He would not bring this up if it was some sort of 3D, 4D crappy film thing, right? Or a meet and greet. This is not going to be, he would not bring it up and like really highlight it at this earnings call. Number one. And number two, James Cameron is not about that. James Cameron would never sign off on a half-assed measure. If James Cameron, if he gave his stamp of approval, this is going to be a significant thing. It's probably going to be some kind of technological marvel. Cameron always goes big. And every single time, this thing is not going to be on the cheap. It's going to be a big deal. I really do believe that. Now, whether that's a land, which I think it will be, or just maybe a really, really immersive, just a standalone attraction, we'll see how it pans out. But this is not going to be just a 4D film. I'm telling you that right now. James Cameron would not sign off on that.
Disney had to throw out the stilts and the blue war paint.
Exactly. Yes. James Cameron doesn't do anything by half measure. In fact, it was the Imagineers who were holding back James Cameron more than it was James Cameron holding back the Imagineers. I mean, his mind just flies. And so, but the Imagineers have been very, very excited about expanding the world of Pandora in Walt Disney World itself, right? And it was James Cameron himself who was saying, hey, let's just wait. Let's just see what, these sequel films that I can produce actually do produce in terms of visuals and in terms of engaging experiences for guests that they can actually experience in the theme park. Let's see what comes out of this before actually, doing an expansion for Pandora at Walt Disney World. But remember when in 2011, when the Avatar and the relationship between James Cameron and Disney was officially announced initially, right? That was stated at the time to be, hey, this isn't just coming to Walt Disney World, this is coming to parks all around the world. And so this, let's say, 12 years later, this is a fulfillment of that promise, right? But it fills a couple of holes for Bob Iger. For one, obviously, you do need to continue to invest in your parks. What better way to do that than with the hottest franchise out right now, Avatar, right? Marvel is taking a little bit of a turn. Star Wars has been taking a turn, but Avatar, it's got big sequels coming out. The last one was a big hit. Let's go ahead and invest in that. But also, too, what supplants his legacy better than actually, capitalizing off of his last biggest purchase in the form of a 21st Century Fox, right? That acquisition, right? And a lot of people have been criticizing Iger for a long time. What benefits are we reaping from that? It's too big of an investment. Where are the goods that come from that purchase? Well, what better way to do that than to actually build something right here at Disneyland Anaheim, and where he can be giving his next round of interviews for when he actually unceremoniously leaves the company in 2025 now, right? 2024, somewhere around there, right?
Yeah.
He loves doing interviews at Star Wars Galaxy's Edge. He feels that really does that supplanted his legacy at that time. Well, now Pandora might be that place. So again, it kind of fills all of those boxes.
And just as I mentioned to you on the phone, Dre, that after the fact that they put this in Disneyland, whether it's a brand new experience because it's to promote the Way of Water and what have you, while Iger's also notorious that not build one, build two. And where else could they put that as an expansion? Well, why not throw it right in Animal Kingdom?
That's it. That's exactly. So it really does kind of check a lot of those boxes. And again, it's a quality over quantity. It's about with the limited capex we have, with the limited resources that we have, what's the biggest bang for the buck? Avatar fits that bill in so many ways. And again, Disneyland I don't think is alone here. I would say look for major announcements, maybe from Tokyo, right? Who we'd also hear from Christine Wastelands McCarthy. She said that the royalty fees from the Oriental Land Company going to Disney were actually increased. It's interesting. We were doing the math on this, OG, and about 40 years ago, that's when Tokyo Disneyland actually opened, right?
Right.
Well, it's been about 40 years, right? Since 1983 when Tokyo Disneyland first opened. Maybe those rights actually came up for renewal, and it looks like Disney actually got a little bit more from Oriental Land Company than they've ever had. And it might explain some of the initiatives that the Oriental Land Company and Tokyo Disney Resort is experiencing right now, but that's a whole other story. Avatar at Disneyland. Come on, you got to be excited.
Oh, it's crazy. And I really don't think this is going to be like a clone or even an attempt at a clone of what we see in Animal Kingdom. Look, James Cameron, we have a lot of movies coming out. We just have Way of Water, which was a fantastic movie, which not only was it a fantastic movie, it turned me into an Avatar fan. I didn't even like the first movie. I loved Way of Water. And I am now a fan. I'm now invested. I want to see part 3 now. But they've even said like recently that there's a whole tribe of fire Na'vi coming in some of these sequels and stuff. So there's a lot of material you can pull from, because remember, these lands take years to build. So they might pull stuff from Avatar films that we don't even know, like, maybe part 3 or part 4. We just don't know. So it'll be very interesting to see what version of Avatar we get over at Disneyland, but I'm calling it now. I really do believe it'll be in that Autopia motorboat submarine lagoon area.
I don't know. That seems a bit far fetched. I mean, that's like saying you're going to stick Star Wars in Disneyland. I mean, come on.
Right.
Come on. We're going to fit it, George.
Yeah, we're going to fit it, bro. If they can't fit behind the rivers of America or anything, that's what fans told me.
Yeah, it's like they'd have to rewrite the whole water path and everything.
It's
like,
oh, come on. It's impossible. It's impossible.
Dude, trust me, bro. I think reiterated like the motorboat cruise area. Like that's where the last big expansion pad is. That's where they're kind of circling. I believe in that context we were talking about maybe the possibility of Tron, but that area right there, everybody knows that is
it's prime real
estate for something, right? And you could, I mean, people are kind of worried about the submarine lagoon or the submarine voyage itself. I could see how you could integrate the submarine voyage into a Way of Water type experience, right? So,
yeah, you get to see the underwater creatures like in Pandora,
the whales,
yes,
all that kind of stuff. I could see it. So, let your mind race with that. But I do agree with you, OG. I don't think it will necessarily be a duplication of the world of Pandora as it exists at Walt Disney World. I do think it's going to take on
and I hope
different
not.
identity.
I hope it is a different identity, because that way it'll drive people to say, you know what, to see this version of Pandora, go to Walt Disney World. To see this version, go to Disneyland. And if you actually look at the overall scope of the Way of Water, it is a completely different landscape than it is to the first film.
Oh yeah.
Think of Pandora as it exists at Animal Kingdom as kind of what the Hogsmeade, right?
Mm-hmm.
Think of this as Diagon Alley. That's kind of the way I would think of it in my mind. Same franchise, but different stories to be told.
Yeah, no, 100%. I'm very, very interested in this. It was interesting because Scott Gooston, again, credit to him, he was saying that I guess in this call that Iger said that we're going to hear more details on this new Pandora experience or Avatar experience very soon. My prediction is probably that annual
shareholders meeting.
You think so?
That's only, I think that's in April.
April 3rd.
Probably there.
Excuse me. I was trying to look for venues of which they could actually bring some of this information out. You might be correct, and that is a visual presentation as much as it is a earnings call like this. But go ahead, George. Sorry.
Oh no, I was just going to say, yeah, I think that would be an appropriate time for the shareholders meeting, and then it's a day before Tron opens, because Tron opens April 4th. So it's around the way, and also Destination D will be held this year because it goes every other year opposite of the expo.
Usually it's November, right?
It's usually November, but this time I believe they're holding it in the fall. I think it's going to be before winter time, so it's actually going to be a couple months before it's usually held, and it's going to be held at Walt Disney World still in the Fantasia Ballroom at the Contemporary. So I'm kind of wondering maybe.
I have no doubt additional details might be shared there, but I think they want to get out ahead of that.
Absolutely. I think more so the shareholders is going to announce more for it, and then they'll add a little bit extra.
I think we heard from some people on Diz Twitter. Oh, get your fun now with Tron, because after Tron, there's going to be a lack of investment, right, for the Parks division. We don't have any big projects. What better way to strike that narrative than to bring out some details regarding Avatar at Disneyland?
And I think it's kind of funny with Avatar is this is the one project from Imagineering that it never had a typical announcement wrap, so to speak. It was never held just to say, okay, we'll make this big announcement. The first Pandora for Walt Disney World got announced after the fact of the expo.
Yep, I was there at that expo.
Yeah,
it would have been nice.
I was. That one was bad.
I honestly, guys, I've been stood up at this expo with an expo announcements for so many years. I have lost all faith on getting any decent information at the expos anymore. I don't even, at this point, I'm like, you know what? I don't care.
Come on. What if? What if for the villains? What if for Encanto? What if for Coco? I mean, come on.
Wouldn't it be great if we could do these things? Oh, yeah.
Now here's one thing that I do want to say, though. That's interesting. Bob Iger actually has, on God, I know I'm gonna.
God, I sound like a Bob Iger dick rider.
I know I'm gonna come off like that right now, but I gotta say it. Leading up to Bob Chapek kind of running the parks, Bob Iger as CEO has had a really good track record with the parks. If you look at what the projects on his watch before Chapek took over in 2015, we had DCA 2.0, Cars Land. Well, Pandora, I think, opened in 2016, but it was definitely in the works before.
It was in, yeah.
Yeah, I mean, even Galaxy's Edge, I mean, was kind of in before Chapes and all that. For the most part, Bob Iger has a very solid track record with these parks. We've seen he's not afraid to spend money. We've seen that a lot of these projects have turned out really, really well. Now, look, once Chapes took over, we got, the Pixar Piers and the kind of the jankier looking shit, right? But prior to that, I mean, before that,
people worked on that, OG. Come on.
I'm so sorry. But before that, I mean, we got some. I think Iger's track record with the parks was really solid. Chapes is out of the company now, right? And Iger's legacy is on the line. I'm telling you, these projects are going to be good. I'm
sorry. And I think that's why he had this little morning chat with Demaro, because he kind of had to put him into play, so to speak, because during the time when you had just mentioned about Cars Land and DCA 2.0 that Dre and I, again, we were on the phone. Seems like no matter what, Dre is he's on the phone with somebody.
It's weird, right?
That Tom Staggs was chairman of the parks, and he had a lot of his fingerprints on that as well, with Iger. So I think now Iger has to kind of reasset Demaro to kind of have that same mindset to say, you're not working with Chapek now, you're working with me.
Well, and Demaro has said, to his credit, he's said that capital expenditures won't stop on his watch, that he's going to be pushing for quality, that he's going to be pushing for new expansions and new additions and so forth. And well, we haven't really seen the fruit of that up until this point. I like how Bob Iger was the one that did it, right? And yes, this will be done under Josh DeMaro's watch, but it will have originated as a Bob Iger project. The venue and the way it was announced and so forth. So it's a very interesting kind of thing there. But OG is correct. Iger has. He's been all right with the parks when it comes to big expansions and so forth. A little bit better at Disneyland than maybe Walt Disney World, but that's a whole other story, right? And similarly here, we're bringing this to Disneyland, and it's like, well, Disney World's like, oh, what about us? We'll get to you. So it's kind of funny how that has worked out. But Tom Staggs was the guy who he was like, hey. If we're doing Avatar, let's not do it at Disney Hollywood Studios, where a lot of the push was coming from. Let's do this in Avatar, taking that long range view right. That sets up beautifully for Star Wars to be integrated into Disney Hollywood Studios later at a certain point. And now both parks actually have something. This is the kind of the visionary side of Iger that is probably most exciting.
Well, I think it's really quick. Sorry, OG. And sort of like what you were saying, Dre, that Avatar: The Way of Water is coming to Disneyland, and then Disney World's like, oh, what do we do? It's like, well, you're getting the Journey of Water inspired by my Moana. It's like, there you go.
There you go. Yeah, everybody's getting water. It's just varying degrees.
Yeah, be fair to Florida. Can we please be fair to Florida?
Yeah, exactly. Exactly. No, but this is. I think this is I mean, OG, when you first brought it up, was like, hey, we're talking about Frozen, right? But what about Avatar in this space? And initially I was like, ooh, but then just thinking about it just for a second, it was like, that could work. That I think you really have something there. And well, apparently they watched the show because, apparently that was taken under advisement. And now I think we're actually getting that in the spot that you had predicted months ago now.
Do you fellas feel that now the next expo, again, not to hold our breath because we know how all the expos go, but now going back to Iger, that this would be his next one? Do you think because of the disappointment of the last several expos under Chapek that Iger would want to kind of turn it around and maybe give us something kind of big to look forward to?
Iger is a PR king. Again, I was on the phone with Dre talking about this.
I'm getting him a shirt. I'm making him a shirt.
Yeah, no, but Iger is the PR king, and I definitely we're not gonna have a repeat of the last D23 with the what if, maybe, imagine. There's a great big beautiful tomorrow, right? We're not getting that. Okay,
yeah,
we're getting real stuff, I think, and I think Iger is a showman. And we saw it today on display with the shareholder meeting. He basically went through a wish list. Okay, we're gonna do we're doing dividends. All right, what do you want? A big land or something? All right, we'll give it Disneyland Avatar. I mean, he went through the list, and he delivered. I think it was a very successful quarterly. I think
I think it was pretty solid. I think overall it was pretty solid.
I think he did what he had to do, is what I'm saying.
He looked at the Nielsen top 15 as a roadmap. It's like, oh, this franchise is good. This franchise is good. This franchise is good. Oh, look at the box office. We're gonna go ahead and do that. And I think somebody said this follows the tradition of Bob Iger making news at every single earnings call. Well, he did it again. And it's like, oh my god, now I'm not even thinking about the numbers. I'm thinking about Disneyland, Avatar, and all that kind of stuff. This is why we pushed it to the back, folks, because we knew this is going to be the juicy thing that everybody wants to talk about.
Well, and who's probably really over the moon about this news is our friend Jay Drunk 3PO, because he's a huge Avatar guy, huge.
He's over the moon right now. He's just hooping and hollering it up. I mean, this is a big deal. And there was something else I was going to say on this front here, but look, Avatar's going to be big, right? But like I said, we've got the finalization, the the kind of turning of the page when it comes to a lot of big projects all around the world. Let's see where that capex,
Yes.
sits a couple of years down the line here. And as Epcot starts wrapping up, let's see what other projects are waiting in the wing because if we're just going to keep on the $6 billion train, even Epcot will come to its conclusion here eventually. So it's going to be really fascinating to see. I think you're right though, guys. I think Iger's about making waves, and it's
and I think this is just the start for him as far as having just the $6 billion in the capex. I think as they start to see progress in the streaming service, as they had mentioned time and time again at the end of 2024, and I think as they start getting up on their feet as each year goes by and each quarter goes by, I think and I'm hoping that capex starts to kind of climb a little bit. But I think $6 billion, I think for them to kind of start out just to kind of not count their chickens before they hatch, so to speak, I think maybe that's the best route to go. As much as I would hate to see the capex drop a little, I would always want to see it rise, but I think they're in the unlikely situation to have it where it's at.
Well, the interesting thing too is that okay, so Disneyland's getting another big thing, right? What's interesting is competition is getting way more intense over in Florida, though, right? We have Epic Universe opening in I think it's 2025, right, Trey?
2025.
Yep, 2025. Yeah.
It's interesting that they chose Disneyland for the next big thing, Avatar, when we have Epic Universe in 2025. Dre, what do you think the strategy is here? Like, are they just going to wait and see, let that thing open and then okay, we'll see how it does first and then we'll respond? Or is that the mindset here? Or because it seems like they're not really phased by it right now, at least,
It's a wait and see approach. Epcot is rounding the bend in terms of wrapping up its big reimagining, right? There's probably going to be a new show there. I think Avatar, especially basing it around a new concept in Disneyland, is smart because, like we said before, we can bring that out to Walt Disney World if, in fact, Epic Universe is going to kind of cannibalize the business there. But it's big investments in Walt Disney World. It's tough because you spend $1 billion out there, you don't even see it. It's you've got all that land out there. You have a whole lot of infrastructure to actually lie down. Obviously, we know the RCID thing is a tense situation right now, right? So let's refocus, put all the emphasis on Disneyland. Then when those things round off and Epic Universe actually opens, maybe we can think about pivoting to that direction. But also, too, Iger's going to be out by 2025, right? By the time this thing opens. So is it necessarily his battle either? It's an interesting. It's an interesting proposition.
I actually agree with Dre as far as with the Epic Universe thing, but I'm going to take it one step further because me, I go.
There it is. There it is.
That I have a feeling all eyes for that time frame is going to be looked upon at Animal Kingdom because of everything that's going to go forward with Avatar at Disneyland. I feel like that they're going to save money, but by having capital by making another one and expanding Pandora at Animal Kingdom. Plus, I feel that Dino Land is on its last leg. I really, truly do. Even though that this was a what if, but that concept art between Moana and Zootopia, I feel like is pretty solid, even to where the placement is with everything. And I feel that with, again, going back to the studio side, they're making a sequel for Zootopia. Zootopia Land is already forming over at Shanghai as we speak.
And it looks great, by the way.
It does. I actually am very impressed. And I feel, again, instead of one, make two. They make Zootopia, make Moana, expand Avatar. I think that would be kind of their route. So I'm saying it now. I could be wrong, but I'm going to try to hone in my OG senses here and I think the spotlight's going to be on Animal Kingdom.
I think the spotlight, I think it will be on Animal Kingdom. I think Zootopia is pretty sure. I think an Avatar expansion is pretty sure, right? So that goes in line with your thinking there, George. I think the rest of it, I think it's going to be predicated somewhat on some of these sequels coming out. which ones they prioritize, which ones actually viable, and so forth. And that might also be a reason why they're investing in sequels as well, right? What is the long-term viability prospect of some of these brands that they have under their belt? Which one's a real economic driver? Which ones do we invest in going forward? So I think that's a simpler one. I wanted to play this one last clip though.
Yeah, absolutely.
Because I thought it was interesting what he was saying here, Bob Iger, that is. And he talks about how maybe they were a little bit too aggressive with their pricing initiatives and how they were alienating consumers and how they're dedicated to changing that. So here we go.
To address the pricing side, it's clear that some of our pricing initiatives were alienating to consumers. I've always believed, by the way, that accessibility is a core value of the Disney brand. We were not perceived to be as accessible or as affordable to many segments as we probably should have been. So after basically paying heed to what we were hearing, we started to address it, and the steps that we took were actually were very, very positive. We got really great reaction to it. In addition, and it's tied to this, is that we've put in place just basically more flexibility for the consumer in terms of how much it costs them to go. And interestingly enough, if you look at the increase of the core ticket at, say, Disneyland, it has not really increased that much, maybe slightly ahead of inflation over the last few years. But one of the things that was interesting to me in coming in and examining our pricing is we were making that available to people for only 15 days a year. So if you look at our new pricing strategy, we made it available for 50 days a year. And so we greatly increased accessibility to our lowest price. And it's really well received. So we're going to manage capacity very, very carefully. Some of that, by the way, has enabled us to essentially shift mix from annual pass holders to people who may come just once in a lifetime or once. They tend to be good customers of ours because of their per cap spending when they're there. That's really helpful. Some of the things that we put in place to manage basically annual pass holders was done to help us manage capacity without doing too much damage to the bottom line. Lastly, we have learned that when we invest in increasing capacity, the Star Wars lands would be a good example of that. Pandora was a great example of that. We can grow our business. In fact, if you look at the results when we put Pandora at Animal Kingdom, from year to year, they were stunning in terms of how many more people visited Animal Kingdom. I mentioned on the call that we're going to bring a version of Avatar to Disneyland. We have other opportunities as well. I've talked to Josh tomorrow about this very recently, like this morning, again, to really look at all the great franchises of the company and see where we can invest in them in the parks to increase capacity while preserving guest satisfaction.
Yeah.
What's interesting about this too is he's Iger says all the right things. I mean, this is his thing, right? He definitely does. Mm-hmm. But what I'm very curious about, because today is Disney California Adventure's 22nd birthday, right? We got to bring up DCA a little bit here. I think this bodes well for the Marvel stuff at DCA for a number of reasons. Number one, Marvel is really like Bob Iger's like pride and joy. Like if you ever hear an interview with Bob Iger, like what he's most proud of, it's Marvel, Black Panther. It's always that Marvel, right?
Yeah.
I can't imagine Bob Iger walked through this version of Avengers Campus with Daddy Josh and was like, "This is breathtaking." I mean, yeah, exactly. I'm sure he was like, "Okay, it's good enough. Could be better." So I think that, and like our source said, "Dude, trust me, bro." They were reevaluating all the projects on the table in the Chapek era. I wouldn't be surprised if we get a pretty significant kind of investment of quality into DCA, probably obviously Marvel related, but that multiverse thing, maybe they'll still go with it, but I think it has a much better chance right now under Iger to be a much more top tier attraction.
Yeah. Yep.
I think that all this stuff bodes much better for DCA now, and especially with it being Marvel, which is really Bob
and
Iger's
especially
baby.
After they had made the announcement. Not announcement, but they made the assumption that everything in the Chapek era just kind of, start over, so
Right.
after we kind of got that new rendition of the e-ticket attraction for Marvel, I can't really foresee. I mean, it still may be like that, as you said, OG, but I think it's gonna be in a kind of a different format rather than it just be something simple as to just sitting in a vehicle and do like a Transformers type thing. I think they're going to add a little twist to it.
Yeah.
Watch the Hulu rights. I'm telling you right now, watch the Hulu rights. If they make that deal and they get those rights back, then there's no stopping them from investing as much as they want into this if they know they can bring it at Walt Disney World as well. That's the one thing that's really helped
that could be
the Avengers brand back.
And that could be the answer for Epic Universe. If they can get Marvel into Walt Disney World as going against the theme park that actually owned those rights to use it in the theme parks, I mean, that would be like the bittersweet seal of approval for Disney to answer to Epic Universe, if that could be also.
Yeah.
That's a great point there, George. But that's a fantastic point, actually. That could be a big answer in many, many ways. And through an assortment of parks as well. Doesn't have to be necessarily limited to the movie park, right? We've seen Marvel concepts go into Epcot and so forth. Expect that to expand bigly if they get those rights back. But I wanted to go ahead and go to the front of that clip just for a second here. Iger says, it is clear that some of our pricing initiatives were alien to consumers. I have always believed that accessibility is a core value of the Disney brand. We are not perceived to be as accessible or as affordable to many segments as we probably should have been. And that is consistent with what I've been hearing internally, that the two big demographics that they're losing right now in terms of brand reception, people over 50 because of the politics, and aspiring young families who are looking to go to the parks. It's just out of reach for them, and so they're going to other alternatives. And this is a little bit of an admission of that. Also too saying, look, there are economic factors at play here as well. There's a downturn in the economy. Obviously, value is going to be very, very key and important. You heard him talk about the $104 pricing or the tier 0 pricing, right? They only had 15 days of it. Now they have over 50 from his words. It's all kind of consistent with a kind of like, remember how I talked about before how back in the Bob Iger era it was, hey, it's okay if we're perceived as greedy but not nakedly greedy. It's a little bit of restoration towards that end, and I think that is pretty positive.
Yeah, no, it is. It is, and it's amazing to see the different styles here.
Yeah,
between Iger and Chapes, right?
Iger knows people are listening in on the call. This isn't just between me and investors. People are listening to me as well. The larger entertainment world, let's say, the larger theme park world, everybody's listening. So I'm a talk to investors just like I would talk to anybody else. It is, and it's interesting how that works, because Chapek was not like that. Even the unfavorable comment, right? What'd they say? Oh, that wasn't meant for you. Iger kind of knows it's meant for everybody. Yeah. Well, I'm on stage, so here we go.
Here we go. Yeah. And I got to say, look, and we have been super, super fair to Bob Chapek over the years, like I even gave him credit. I think it was on Lorena's show that we were on the other day, right? I even said, Wondrous Journeys, fantastic fireworks show, and Runaway Railway, a fantastic addition to Disneyland. Both of those things were all to Bob Chapek. They were on his watch from beginning to end, basically. And home runs, right? But I can say this very confidently that if Bob Chapek was doing this earnings call today, it would have been an unmitigated disaster with everything going on with pelts and all that stuff.
Yes,
an unmitigated disaster. And because this was Chapek's Achilles heel, was this PR kind of smoozy thing. Iger's got that shit down. I mean, he really, really does. Chapek, he did not have it down. It would have been soundbite after soundbite about what, oh my God, can you believe what Chapek said? It would have been that whole thing.
They've just incurred a $1 billion loss and a 2.4 million subscriber loss at their GTC division. You didn't even hear about it. I mean, it's not even a headline, and it's like, whoa, that is overnight.
And the stock went up like $8. I mean, after hours, the stock was up to like $120 a share. I mean, it was going bonkers. Now, I think it kind of came back down to earth a little bit.
Sure.
I think it's now at like 117. Even that, though, I mean,
wild.
That points to, now, look, to be fair, it was a decent quarter. I was expecting way worse, but there were negative things in there where you can definitely go, okay, yeah.
But Iger addressed that.
Really sold it.
Iger addressed that. He didn't make it to be where it's like he had to wait for someone to ask him about it. Like he threw it to say, you know what, we have our issues, we have our problems. Here's how we're trying to maintain that moving forward. But then you would also throw some of the positive from the negative. Always end on a positive. Start it with the negative.
Under promise, over deliver. What is it? Hey, you know what? We incurred this loss here, but we're making huge changes. Here's the restructuring. Here's the 7,000 people that we're cutting. Here's the $5 billion that we're cutting here. Here's the long-term strategy here. We're going to be profitable in the our DTC division coming fiscal year 2024. It's all these kind of things that it's like, oh, you kind of have an answer for these things, don't you? And it's the same information, just conveyed differently, and it's the Iger effect. And yes, he was on a first name basis with everybody and saying, "Hey, Doug, it's been too long. It's great to have you. We've done this so many times."
Yeah, and that shows you to kind of go back to Peltz. And again, this was actually it was WDW Pro actually on their stream today that actually brought this up, which I thought was a fantastic point, where he was saying that like the smooziness with Iger and these big investors on this call kind of shows you where the heads are at with this whole Peltz thing. They're on board with Iger for the most part. And look, nothing is for sure. I mean, 6 months from now, we could be like, oh, Peltz is on the board. It's a done deal. Who would have thought in November that Bob Iger would come back? I never expected that. I thought maybe Chapes would get fired, but he would be replaced with someone new. We just never know. But
we don't even know if Iger's going to be finished at the end of 2024, 2025. That has been said many, many, many times. And it could be another renewal of, I doubt it. I think.
You think he's ready?
I'm kind of looking towards Dana in my mind.
Okay.
Yeah. I don't know why. I think knowing Iger, especially to kind of go a route to say, you know what, let's have the first ever female CEO of the Walt Disney Company, and who better than me to pick that person? Well,
and this is the thing about Dana too, is like, yes, I think they're definitely gonna do like the whole checkbox thing, like, okay, she's a female, right? But to Dana's credit, she is very, very capable, this woman knows what the hell she's doing. Yeah. And now, look, there could be things about her that I don't know yet that are terrible, but from what I know right now, I think she's a solid candidate for this job. I really, really do. I mean, she navigated that Peter Rice thing fucking beautifully. That she was so close to him and she didn't get fired. That in and of itself was a feat.
Part of Iger's opening statements was talking about, what the acquisition of 21st Century Fox meant to the brand, meant to content distribution, meant to their content library. But he also highlighted the personnel that they absorbed as part of that process. That includes Dana Walden. Why is he saying those kind of things? Why is Dana Walden in this primo position as part of this restructuring? She's definitely got to be on the list for sure.
For sure. Absolutely. Fellas, this was a fantastic conversation. The stuff that we've talked about today, I'm sure will even be their own topics in future videos because there's just so much. This Avatar thing we'll be following for years probably. Oh, yes. But I mean, it's absolutely wild. But I just want to reiterate one more time before we close it out that Vash Sky was on WDW Pro's channel yesterday, and they talked all about this Universal Europe possibility. And it is a great conversation. That link will be at the end of this video. So make sure you check it out and you support our friend Pro. He does fantastic work, doing great stuff over there. So check out the video, subscribe to him. Awesome guy, really, really cool. So just want to put that out there. And also want to say happy birthday, DCA. 22 years, baby.
22 years, February 8th. Oh, what a park it was when it first opened. But it really has
22 years of how OG eloquently puts janky shit.
Yes.
Yes,
exactly.
That is true. I think it's blossomed into a really
park.
very interesting park. Yeah. With a great entrance. Buena Vista Street is awesome.
Absolutely.
With one of the
Love
best
it.
lands ever created.
Cars Land.
Right?
Oh man.
And it has, I think, a wonderful future. But I guess we'll just have to be pivoting back to Disneyland one more time. So there you go.
One more time. But Vash Guy, producer Dre, host of Freshly Squeezed. If you can let everybody at home know where they can find you on social media, my friend.
Best place to find me is going to be at VashSky. They're on Twitter. It should be back up now, but it might be experiencing problems. Give Elon a call. Let's see what we can do here. But over there,
he probably just got off with Iger.
Exactly right. Exactly. As Christine Waysons McCarthy would say, for all the robust discussion right there, and the best place to see me, well, it's going to be on Orange Grove 55. OG, you got that drop for me?
Oh, I got that drop. Right here, buddy.
And there's the biggest bargain of all.
Where the biggest bargain of all lives, where we have shows like Story Geeks with Jay. We have Citrus Corner. We have Orange Grove 55, the original, the classic flavor. Citrus Corner and my own. And Orange Nerd, right? Yeah. Exactly. And my own, sorry, I had to get them all in there. There's a lot of brands in there. Come on.
There is.
And my own Freshly Squeezed, your source for juicy news and info, squeezed fresh right from the Grove.
Perfect. And down below, we got D Family Man 23, host of our Walt Disney World show, Citrus Corner. George, if you can let everybody at home know where they can find you on social media.
Absolutely. And of course, Citrus Corner is probably going to be taking a little hiatus here, being that everything's going to be over at Disneyland now.
Be fair to
Florida. That's fantastic.
But I digress. If you want to find me, you can find me on my YouTube channel, Disney Family Man 23. You can interact with me on Twitter at Disney George. You can find me also on the new podcast, A Walk with Walt. And of course, you'll find me here on my home base with Orange Grove 55, with Citrus Corner, with all that sweet, juicy, but sometimes sticky Disney news and info.
Perfect. So thank you all so much for watching. Comment down below with all your thoughts on this quarterly earnings call with Bob Iger. Iger has returned. He's back in he's back in the saddle. He's doing Iger things in the most Iger way.
So funny.
It's classic Iger. It's just classic Iger.
It's classic Iger. Can't believe we're back.
We're back. Comment down below. And just in honor of our buddy theme park wizard, because he's the universal guy.
It's been an honor serving with you all.
Have a wonderful day, everybody. See you next time.